Hello and welcome to the cnbc TV 18 special. I'm Shereen. Bhan. October last year, corporate India saw one of its most bitter corporate battles. It changed things for the House of Tatas and it changed things for the man who's now heading the House of Tatas. Chandrasekaran joins us here on cnbc TV 18 for his first interview after completing 6 months in office. Chandra, appreciate you joining us here on cnbc TV 18. You know, it's obviously changed life for you in many, many ways. But let me start by asking you, because this is actually the first time that we've spoken since you've taken over at the Tatas. What was the mandate that was given to you when you took this job on? What was the brief that was given to you when you took this job on?
They had concerns about the performance of the different businesses. I think it's a broad brief to get the group together and also to look at individual companies and then define the roadmap for the future. Some of them are private companies, some of them are public companies. So it's a broad brief. I spent the first month or so looking at all the data and taking stock. And then I formed an agenda, which I played it back to the board later on. I think fundamentally, for me, it's about, there are big positives, first of all, in the group. I was just completely overwhelmed by the level of support I got from within the group as well as from corporate India. And the single most thing that also impacted me is the level of trust that this group enjoys. And everybody wants you to succeed. So there's a tremendous amount of goodwill. Which felt very, very good. At the same time, it puts a lot of responsibility as well. Then in terms of the areas that I needed to look at, definitely I needed to look at capital allocation, because that's the feedback I got from several investors. And
so are you taking on a fund manager's approach now?
They pushed me so much on returns. And disciplined investment and all the things which you've heard from the media, but definitely the whole financial performance of the individual companies and the group as a whole, and the discipline in capital allocation and so on and so forth. And then also the second thing is, I feel while the strength of the group is the portfolio and the platform that you have, and pretty much we have a tremendous opportunity in each of the sectors. On the other side, the complexity of the group. It's extremely complex. And if we have to move forward, that has to be addressed. So in a manner of speaking, I feel if I can use 3 words, it will be like simplify, synergize, and scale.
Okay. Simplify, synergize, and scale.
That's the kind of approach in terms of the business performance. The second thing is also about, I felt there are gaps in talent and for the things that I needed to do. So pretty much I decided that my first focus should be on building a team. So I went about building a team, and you have seen in the media, and pretty much it's all known. Significant amount of time went in building the team. The third thing is, I think more or less there, but you'll always have a few additions. But many key people have come on board, and a few more will come on board as we go by. But major portion of the formation of Tata Sons is done.
And the third?
And the other aspect is also, we have to communicate a little bit more in terms of what we are going to do and how we do, etc. Bring a little bit more transparency, and that's something that I'm working on.
Okay, let me pick up on each of those points that you talked about, and let me start by asking you about simplification. 100 operating companies, 29 listed entities, over 900 subsidiaries, and let's now talk about performance. The top 10 companies account for 94% of the group's revenues, and 60% of your companies actually have a return of equity of less than 10%. So when you start to now look at whether it's restructuring, rationalizing, pruning, what are the parameters that you're going to put companies, individual companies through before deciding what you intend to do with them?
See, first of all, you can't do a clinical mathematical approach overnight. That's not the approach that I'll adopt. Let's look at it in multiple dimensions. First, going forward, what is the capital allocation policy? And that we have firmed up, and we will look at returns very seriously in every which way. Some companies look at capital employed, some companies look at return on equity, and we have worked out what the process is going to be, what the returns is going to be, and we will use it very, very rigorously. Now, when you look at the existing companies, in the existing companies, there are companies which are performing well, there are companies which are not performing well. And you've got to get into the details. You can't just say that this company is not performing well. Maybe execution is bad. Then we need to fix that. If there is every single company has to be looked at. If there is an opportunity to fix that, we'll fix that. If you cannot fix it, then we've got to take the call in terms of...
So in your assessment today, and you've spent the last 7 months doing exactly that, in your assessment today, how many companies fall under the head where it's not fixable anymore? It's time to let go.
I think I can't get into numbers and statistics yet because I would like to also tell you that I have to simplify some structures. If you look at the whole group, there are 3 big companies, Steel, Motors and TCS, and they have the scale. If you take the remaining, there are a number of companies in different sectors, but they have not scaled up. So I need to figure out a way of scaling them up. If you take the total group, the areas of growth has to be apart from Steel, Motors and TCS, which are segments of their own, if you will. Then we have the consumer, retail and consumer. Then we have financial services. Then we have infrastructure. Then we have, for want of a better word, tourism. In each one of these sectors, we have multiple companies. And also we have defense, multiple entities are there. We can talk about each one of those. And so at least there are 5 segments apart from the 3 big companies. And all of them present a significant opportunity of growth. And we want to address that. There we need to see how to consolidate where we can, how to synergize where we cannot consolidate, and how we scale. The area where, I particularly have not mentioned telecom, the area where we have a big issue is telecom. If you take telecom, we have 3 companies. We have Tata Teleservices and Tata Tele Maharashtra, which is the mobile consumer business. Then we have Tata Communication, and then we have Tata Sky. While Tata Sky and Tata Communication was in great place, Tata Teleservices, the mobile consumer business, is really in bad shape. We have a huge debt, and the footprint we have and the kind of spectrum we have, it's very, very, very difficult, close to impossible for us to be able to recover. So that's a company that we've got to find a solution very quickly.
You've been trying to find a solution for TTSL for a while. You've been on the lookout for a buyer. You haven't found one. So A, how much more runway do you actually have before you take a call on whether you pull the plug altogether? And B, where do things stand with the possibility of finding a buyer for that business?
See, whichever way, I have given myself Tata Teleservices as a #1 priority to find a solution. And I had Steel also. Then that deal has been done. On Tata Teleservices, I am at a point that I need to make a call.
Okay.
Okay, I'm looking at all options. I'll figure out a way this fiscal year.
This fiscal year. Yeah. So that could mean closing down the business altogether?
It could mean anything.
Yeah.
It basically
the 30,000 crore debt?
I don't want to put good money after bad money. I have a situation where already the debt is about 31,000 crores. Additionally, I have spectrum liability. And we are making losses, cash loss on a month-on-month basis. So it is not a business that I can easily turn around unless or otherwise I'm willing to commit another 100,000 crores.
And you're not willing to put that money.
That's not prudent. So I will make a call. I am at the point now. Don't ask me whether it is this month, this quarter, next quarter.
You said this financial year.
But I am this financial year. I would like to find a solution.
Do you still believe that there is a possibility of finding a buyer?
I mean, let's not speculate because
you've been in talks.
Every newspaper, your channel, other channels has been speculating.
Yes.
In fact, the speculations have been more than what is really happening. So I don't want to add to it.
Would it be fair to say that the interest from a potential buyer at this point in time is not looking particularly bright?
So let us leave it at a statement that I have to find a solution, and I'm committed to finding a solution one way or the other.
Okay.
I will have to take a tough call, and I will.
Okay. So you said TTSL is your number one priority. What is your number two priority in terms of the company or the business that requires fixing today?
No, there are. See, basically, if you look at the group, in the group, let's look at a concept. I think priorities are also there for growth. Priorities are also there for execution. Priorities are also there for balance sheet. From a balance sheet point of view, a few companies are highly leveraged. Telecom is number one, Tata Television is number one. Then we have a high leverage in steel. And I think we have found a very beautiful solution in the way we have formed the joint venture.
With ThyssenKrupp.
The way we have done the capital structure of that entity, I think it frees up Tata Steel India to focus on the growth in India. So Tata Steel in India, we have definitely aggressive growth plans, whether it is organic or inorganic, because there is demand, there is market in this country. So we will definitely go about building the steel business in India. And the JV will operate on its own. The capital structure is solid, so the JV will survive on its own. In fact, it will grow on its own. Then coming to...
If I can just pursue the conversation on steel for a little bit longer. You said that the focus now very clearly is going to be on growing the business in India, organically or inorganically. There's a bunch of potential distressed assets on the block. Are you on the lookout? Have you examined any possibility closely?
Very much. And, you know, I'm not going to tell you...
Don't give me names, but
definitely,
you feel it looks good?
It all depends on where it ends, finally,
so
but we will definitely look at it.
What is the kind of war chest that we would be talking about for potential acquisitions within the steel business in India?
I think, you know, it's fair enough to say that whether it is organic or inorganic, we have the potential to double our capacity in India. For what period of time, I don't know. It depends on whether it is organic or inorganic. But definitely, I think there is a big possibility of growth, and we will look at what deal comes and at what price, and it makes sense, and we will do it. So otherwise, we will go about parallelly looking at organic options.
Looking at organic options.
Because our Kalinganagar plant has to scale up.
Sure. You know, again, just a quick word on the steel business, and if one looks at the return on equity, Tata Steel at 2.5%, JSW Steel at 16%. So given the outlook and the vision that you have now for the domestic business, and the fact that you believe that you will be able to double capacity, whether organically or inorganically, what is it going to mean from an investor's perspective?
I think, you know, if you look at the Tata Steel, once you remove the European business and the pain, still, while doing this deal, we have taken some pain in Tata Steel India. But what it does is now it brings all the capital ratios under control, both for the European entity and for Tata Steel India. Immediately, once this structure is done, we will have very respectable capital ratios. And Tata Steel India is a well-run business, and the EBITDA they produce for every million ton of steel is a benchmark. So I think from here, in terms of returns, Tata Steel will perform exceedingly well.
Okay, let me talk to you about Tata Motors, and you acknowledged this in your speech at the AGM as well, that you're disappointed with the performance of Tata Motors. You hope that things will turn around. You would like to get back to the path of providing dividends to shareholders. I spoke with the MD, and he said that there is a long-term turnaround plan, and there is currently a short-term turnaround plan that has already been put into place to ensure that we see a turnaround over the next 6 to 9 months. What is your view specifically on Tata Motors? Because whether you look at margins on either the passenger vehicle side of the business or the commercial vehicle side of the business, lagging peers like Maruti and Ashok Leyland quite significantly and for significant periods of time. What is the view now on Tata Motors?
See, Tata Motors, we are definitely on the move. The team is working extremely hard. We have had intense discussions, And if you look at Tata Motors business per se, on a 280,000 crore business, approximately 235,000 crore business is Jaguar Land Rover, which is doing well, which is giving a double-digit volume growth year on year. And some years their margin is good, some years their margin is not so good. But the point is that they are very committed and their balance sheet is good. And they have significant number of products that are being launched. And it's all committed for 19, 20, 21 and so on and so forth. Now if you look at the remaining almost 45,000 crore business, 35,000 crore business is commercial vehicles. And I think passenger cars are roughly around 8,000, 9,000 crores. And we have to get both the commercial vehicles and the passenger cars performance, both in terms of growth, market share, as well as profitability. And that's the journey we are on. If you look at commercial vehicles, the market share has dropped significantly.
Very significant.
And now we are working very hard to turn around the market share, and we are very confident because of 2 or 3 reasons. One is there is a tremendous focus that has been brought in terms of commercial vehicles. Second is any product gap that we have, we are addressing it. Some decisions have been taken and those vehicles are coming, some in the works. And there is a significant effort going on specifically on cost management and profitability improvement. And you will start seeing the results. I hope the results will be seen sooner than people expect.
When you say sooner than people expect, the guidance broadly, if I could call it that, the guidance is between 6 to 9 months.
I think Gunther is the right person to speak, and I am fully supportive of what the team is doing, and we are engaged closely. Then in terms of the passenger cars, I think passenger car business margins are suffering very deeply in every single car model. Every single model, it's suffering. And that's something that we've got to work on. And there the challenge is twin. First is they've got to get the volumes. At the same time, they've got to fix the margins. Because you see more volume on a loss-making product and you will continue to make more losses. So I think I must say that the recent models have got a lot of traction, and we are looking into the contribution margin and the margin of that business, and that is under review as we speak. So Tata Motors is a priority. I think we will come out strong, both in terms of market share and in performance, and I'm also very happy that we won this EV. That's again a call we took, because we spent time looking at all the models. They've got multiple models on EV. They've done a lot of work, and we sat together and then said we've got to go for it. And I'm very glad the team put up a great show, and we're there.
Since you spoke of the bid that you've just won, at 10.2 lakhs per vehicle, do you make any money? Because the second bid was M&M, and there's a difference of 2 lakh rupees between your bid and their bid.
I've seen the comments by Pawan and Anand, both of whom I deeply respect. But I want to tell you that we'll make money. You will make money? Yes. Okay. And is this going to be done through the Sanand plant? Is Sanand going to be... So leave the details. If you want the details, you go to Gunther and Mayank. Okay. So you're not going to... I have the details, but I'm not... I don't want to speak on behalf of Gunther or Mayank. So let me... you will tell them that your boss told me this, and... You are the boss, sir. You're entitled to speak. They are working very hard, and they know what's going on, and I think you should... Okay. Let me then pick up go back to my conversation with Gunther and put that forward to you. And when I asked him specifically, what is the future as far as the Nano is concerned? And he said, well, that decision will have to be taken in context of our strategy for passenger vehicles. And that decision will have to be taken keeping our view on where we stand as far as the entry-level segment is concerned for the passenger vehicle space. What is the call finally as far as the Nano is concerned? See, I want to clarify this for everybody. This question keeps on coming. People are targeting Nano for no reason. Tata Motor passenger cars has multiple models, starting from Indica. They've got a series of models. Yeah. The only model that makes money is Indica. Every other model makes loss. Sure. And Nano loss on a yearly basis is less than, I have the actual numbers, is less than 4%. Is about 4% of the total loss that the passenger car vehicles make. Okay, and So whether you shut down Nano, whether you give it a life, numbers are not going to change. Needle is not going to move. But we've got multiple options in front of us for not only for Nano, but for every other model. Okay, and we're evaluating all those models. In fact, the way the passenger car, I'm also learning this industry. I'm not an auto expert, but I'm learning all this. I've looked at the financials, but I'm also learning these models. Every other passenger car makers always has multiple models. So how do you actually make money on these models if you're able to sell, especially after you've depreciated the investments on the product development, you start making money as long as the product sells. So this decision has to be taken for every model. But the only limited point I want to make is that this is not a $1 billion question in front of Tata Motors. Okay, but this is a question that will be answered for every model. And we will see what is the model that we can be repurposed, what models we will launch for an electric version, and what models can continue to sell, and what models have to be upgraded. All those questions have to be looked at. But Tata Motors actually has a very small passenger car business. So we need to scale up because, let me say, we are 1/10. The number of vehicles we sell is 1/10 of the market leader. Okay, so that definitely means there is a market, and there is and overall the market is also expanding. So there is a big market in this space. So how do we capture that market? And it's not going to be a one-quarter affair, but we'll work on it.
Let me then ask you about JLR, and you spoke about JLR. In terms of scale versus its global peers, I mean, if you look at BMW, or you look at Daimler, JLR, I think for FY17 was about 0.6 million units versus 2.2 for Daimler and about 2 million for BMW. So what is the aspiration, A, for JLR in terms of scale? And B, again, the question that keeps coming back, are you looking at a listing for JLR? Is it likely to be anytime soon? Is that an active consideration today?
Couple of answers. I think you should meet Ralph Speth when he comes here or when you, and they've got very ambitious plans. Obviously, how we achieve that is something that we have got to see, because the amount of money that we are investing in terms of new product development, the capital that we are putting in place is very, very significant. We put 4 or 5 billion every year. So there is a big ambition, and what is the route to achieve that ambition is something that that is being deliberated upon.
Is an inorganic opportunity also being deliberated?
If there is an opportunity, yes, but there are not easy options in that space, because they are a very super high-end luxury segment, and there are not easy options there. But definitely, Ralph and team have high aspirations. And see, you never answer these questions like whether you are going to list JLR, but I can definitely say, if you're asking whether it's under active consideration, the answer is no.
The answer is no. Okay, so not actively looking at the possibility of listing JLR.
I feel very bullish about the India story. Where in the world you will have such a large consumer base